Sandip Sabharwal, good morning.
Morning.
You were supposed to come to studio. I kept the ladder ready for you, the car ready for you.
No, I only climb the ropes. I don't do the ladder.
No, I just missed that last part. Sorry. See, audio connection I told you it's better to come to studio. I can't hear you now.
No, I said you put the rope. You put the ladder. So I came. I saw the ladder. I came.
Next time, bhai, I can hear you better. Monday morning, let's start with Sandip Sabharwal in the studio. How are markets looking?
Markets, I think, fine. Things are going well. Macro-wise, there's no issue. Uh, the inflation data is getting controlled. I think IIP is subdued, but somehow I think the IIT composition in India is completely flawed. If you look at the results of various companies and the growth figures being reported by various companies, they don't correlate with the IIP growth. So I think that growth for some reason in India is getting underestimated, especially on the industrial production side. In the global context, uh, also I think things are stable, so that helps India. And it was expected that eventually we'll see the foreign money come back into India as the outflows had reached a crescendo. So that's something also which we see now, and that's normally supportive. So I don't see the steady flow of foreign money stopping anytime.
Sandeep, finally, patience must have paid off for Tata Motors investors. One of the strongest quarters for the TML group, and even JLR FY24 guidance is looking impressive.
Yeah, things are positive from a projection standpoint. The only risk I see in Tata Motors is, so although we are holding, but we have to be aware of the risks also, is that the global economy is not looking as great, and JLR largely relies on the global economic performance, both in the Western economies and China for its growth. So efficiency and productivity gains will obviously help them, and profitability will improve. But for volume growth to happen, we need to uh, see the economic growth stabilize in many of the economies, and that could be a slight challenge for them in just this year. Overall, directionally, I think they are on the right path.
We're talking about FOMO. I guess the word FOMO really applies to foreign institutional investors. The way they've made a comeback after selling India down, it is absolutely incredible. Sandeep, it's like saying, I'm sharing a personal experience. I had to travel to Goa this weekend. I was lazy and late in booking my tickets. And that's an event I had to go for. I couldn't have cancelled it. I purchased a last minute ticket. 1 month ago, the ticket was available at half the price. And since I made a last minute purchase, I was forced to pay a higher price. I get a feeling that that's the same thing which is happening with FIs. They sold India, they went to China in 2021 and 2022. Now they're forced to come back, and when they're coming back, they themselves are bidding the prices higher.
So, Nikhil, that's the challenge in value investing. That value investing without growth becomes a value trap. And that's what China is today. All of us need to recognize that the structural issues in China are so great, both related to their over investment cycle for almost a decade, combined with the high debt of their local governments, a lot of it which is hidden under different structures, and the fact that they have reached a demographic peak, and given their demographics, the population decline over the next 10-15 years is going to be so steep that it will be a negative impact on GDP. So I think a lot of these investors don't do that long term analysis. They just look at valuations and invest, which is somewhat flawed. So I think India stands much stronger. And I believe that over the next 1 or 2 years, this phenomena will even get more entrenched.
I'm going to shift gears and talk about some breakout stocks here. And for a change, Naresh Mirani, the one you track, it'll make you happy and smile. I can guarantee this one because the name is Delta Corp.
So finally,
See,
the stock
without
has.
me prompting you, smiling. Kitna Delta Corp hai bhaiya? How much
See,
have
so
you
I
bought?
have a basket, but I've been a contrarian on this whole space, hotels and the whole theme. Delta Corp is a stock which has been say over the last 10-12 years, the stock was always say a story stock which never performed over the last 2 years, 3 years. If you look at the performance in terms of earnings, etc., it has been much better. But the story somehow has seems to have dissipated, and the market interest has gone off. And that is where the big opportunity comes in if one has a little longer term view. The stock has made that base around that 180 mark, which it did not break in the last 1 year, 1.5 year. Finally, after yesterday's move, the stock has become a higher top, higher bottom formation in the short-term charts. Short-term trend change done. A bigger breakout comes into play about 235 levels, which is the high for the last 1 year. So overall, the whole space looks interesting. If you look at globally also, the space has been doing well. And if you look at even EIH Limited, we are close to 52-week highs. So this whole space of hospitality looks very interesting. Delta Corp looking out for a breakout about 230, 35 to actually trigger a much bigger move in the stock.
Sandeep, at this current juncture, if markets are looking good and decent, what should be the best strategy? Ride the momentum, don't be in a hurry to sell. The best of the summer rally of 2023, that's not over?
I don't think the rally is over because the rally just started last month. And if you see from after 4 months of fall, the markets are up just 4-5%, or I think slightly more than that. So it's not that we've had a runaway 10-15% rally and then we need to worry about it. So overall markets look well placed, and depending on what people are investing into. I think holding your horses is the best strategy. Normally, I do keep some cash on the sideline as a all-time strategy, so that whenever some very good opportunities come, we can deploy it. But X of that, one should be more or less fully invested.
Sandeep, real estate, that's one space that you track. And just looking at DLF's performance, the Q4 collections came at 1,929 crore rupees versus 1,398 that the market was anticipating. So clear beat there. And the net debt as well has declined. Having said that, is the best already baked in the price at 435?
I don't think so, because I believe that real estate stocks, especially if we are talking in the context of DLF, it had a good run up from 2020 in 2021, 22, almost for 15-17 months. It had a phase of consolidation when the monetary cycle was on an upcycle. And as the monetary cycle has peaked, we have seen that from there on, the real estate stocks again started to outperform. And I think if they have been able to sustain their growth throughout the rate hike cycle, then now is not the time to worry so much. So I would be positively inclined. I would still think that DLF should have more upside given the recent data which they have put out and their outlook.
On with us, let's hear out some top fundamental stock ideas from Dipan Mehta and Hemang Jani.
Yeah, that's right. I think that certainly does open a risk factor for Zomato, but it also opens an opportunity as well, because on the ONDC, as I understand, you still need delivery partners, and maybe Zomato could offer just its delivery services over there. So I think it's a very volatile and fluid situation, and the success of ONDC also needs to be tracked very closely, because quality assurance is a big factor on ONDC. Which other platform companies, be it Swiggy, be it Amazon, do offer, and the comfort level is higher with such platform companies than newly established ONDC. So I think it'll go through its phase of maturity, it'll go through its phase of understanding and acceptance. But for the time being, I think Zomato and Swiggy are going from strength to strength. It's a fabulous duopoly, and they are changing habits as far as consumption is concerned. Eventually, it's going to become more and more mainstream ordering food from outside than cooking at home, especially with the millennials and the Generation Z. So I'm still quite positive on Zomato at its present valuation. But yes, you have to keep an eye on all the disruptions which are taking place within the sector. So, I mean, Zomato was a disruptor itself. Who knows, it could get disrupted by something else like ONDC. And it's not that you're going to bet the bank on a stock like Zomato. It's just that you want to have a small position in it, because eventually I think if they're able to show profits and go fabulously in the black, then this stock could be a multi-bagger over a 5-10 year period.
In terms of the mid cap names, we have been liking something like PTM and Zomato that we had already discussed. I think these are high risk, high return ideas for sure. I think Mankind is something that would present great opportunity for the momentum players. You might see a little bit of swing or volatility, but surely it looks like clean trending story at this point of time. Apart from that, some of the numbers that were good, I think one can really look at SRF, where the chemical business, performance was extremely good. And as I said, some of the NBFC companies, Mahindra Finance and Chola, are the ones that we've been liking at this point.
Meantime, Sandeep, just curious about your take on PVR Inox. Will be coming out with their numbers, the merged entity, for the very first time. So, of course, there's no comparable numbers. But given the fact that apart from select movies, there have been nothing but a spate of flops, do you think it's going to be a tough road ahead for PVR Inox?
Road ahead in these companies is very tough to predict because it all depends on, I think, how the overall box office pans out, the quality of movies that come out, etc. Overall, the theme is the strong one of going out as incomes increase, people go out more, spend more on entertainment, etc. The challenge has been the extremely poor response to Bollywood movies over the last few quarters, with few successes in between. So it's a trend which has got broken, where we used to periodically have good hits. Even the big star movies have not worked, and that's the challenge the stock is facing, and that's why it's more near a 52-week low. So now I would think that there are no triggers to buy immediately, but if someone has it, I wouldn't be a seller, because I would think that it with just small triggers, when stocks are at 52-week lows and the industry is such a duopoly kind of in a situation now, we could see upsides if things start to turn around. So I think, but that's something we need to wait for.
Globally, is that a lot of these so-called halo names are reversing. The stock of Airbnb is down, Marriott is going higher. The stock of Netflix is down, and traditional multiplexes, whether it's in India or globally also, they are making a comeback. The world suddenly is looking very different. This whole idea of asset light, don't create asset, everything is user generated, everything will be funded by P investors. All that is just reversing, my friend.
Yeah, so I think hotel chains, global hotel chains are doing very well. That's a phenomena which is there, and that's something we see in India also in terms of how Indian hotels is done. So I think it's always a phenomena where the markets take some theme to extremes, then they get sold out, and they might go to extremes on the other side. That gives them buying opportunity. So I think that's how the markets are. It's cyclical.
And 57 rupees for Indian hotels. Boy, I mean, what are numbers? What a year it's been for Indian hotels. 60% higher for Indian hotels in last 1 year. And every time I say Indian hotels, Nuresh just feels happy and rich. Happy and rich is the word for you, Nuresh, right? Yeah.
I would say much more
Yeah.
to come. So the view is there is much more to come in the wholesale sector.
I say Tata Motors, guess what? Who feels happy and rich? Kunal, any guesses?
Yeah, I'm looking at my phone. I don't know.
No, Sandeep's about Tata Motors. Kunal, I was not referring to you.
No, that's why I'm looking at the phone, I said.
Every time I say L&T, who feels happy and rich? Sandip Sabharwal. Sandeep, till what price you will hold L&T?
So I think given their result delivery, we should see a phase of consolidation now, because it's had a good upside, because the results were not as so they were below expectation on margins, and despite the growth outlook being very strong, they have been underperforming on the margin side for some time. So it needs to go through a phase of consolidation now. There are no triggers as such for one to sell. So if one has over allocation, excessive amount of L&T, then obviously some amount can be trimmed and one can look at some other ideas. But X of that, longer term directionally, next 2-3 years look good only for L&T.
What about Indian hotels? When anyone says that name, I know who gets happy. Nuresh, you for sure, right?
I like the whole hotel space as such. So it's not just Indian hotels. So it's a trend global. It's India. It's everywhere. And it's taken 15 years to come back. So 2006-7 was the time where we saw the sector peak out. And when such sectoral breakouts take place, it continue to surprise. So we've seen Hindustan Unilever do nothing for 10 years and do great for the next 5-7 years. We've seen Reliance do nothing for 7-8 years, then do well for the next 3 years. So I believe that is where the sector is placed. So we'll continue to keep watching the smaller names also in the hotel space. In fact, that is where the shift should be going forward.
I want to go to diagnostic stocks. And why? Because look, when COVID happened, these stocks started trading at P multiples of 50, 60, 70, even 100 times. That big deal from Thyrocare where Mr. Velumani sold out his stake to a online pharma retailer, that made the top for the sector. And then those levels have not come back for a Metropolis or even for Thyrocare. But why am I bringing it up? Because suddenly in last couple of days, a stock like Dr. Lal is making a comeback. Metropolis up is up quite smartly from the recent low. Sandeep, because of COVID, these stocks got massively re-rated. Everybody was testing. It was just not COVID, but the additional blood tests, which gave almost like it was a sugar rush or a gold rush for diagnostic companies during COVID. Now realization has kicked in that these are businesses which will grow at 12 to 15%. But at these levels, if you're buying the stock, is it time to be a contra buyer here?
Say, 12 to 15% is too high. So the sector itself will not grow more than 10%, and with the increasing competitive intensity, individual players might grow at a lower rate. Now, in the minds of people, the entire valuation paradigm has got distorted. These stocks should be trading at 15, 20p. Like you said, they went to 100p. Even now, they are trading at 50 odd p, which is too high for these stocks. So I don't think that even these prices are justifiable. We have to either say see more price destruction or long periods of consolidation before we could even consider buying them.
How would you approach a stock like Asian Paints, Sandeep? Expensive, very expensive. But the growth in the quarter gone by has come back, and after that, paint prices, crude and crude derivative prices have gone down further. So while Asian Paints on all yardstick look like a mature business with a bloated P multiple, but for the quarter gone by, numbers were quite impressive.
Yeah, Asian Paints is a phenomenal company. I think the way they perform, they deliver, I think it's exceptional. And that helps it sustain premium valuations. My only concern with the paints industry is that I see competitive intensity increase so drastically going forward after Grasim enters that maintaining high margins will become tough. It's nothing against Asian Paints. It's the overall industry view, and Asian Paints is obviously the market leader out there. So, but their delivery in terms of volumes and profits are so phenomena that it takes away those concerns for some extent. So some upside it gets created, but substantial upside is something which I wouldn't think would happen in Asian paints. Till the time Grasim enters, we know the new competitive landscape, and once that happens, I think then we'll get a time to look at it again.
Thereabouts. That's 50 is where Asian Paints wrapped up the previous session. But let's find out what the pre-open rates are, and more importantly, the mid-cap strategies from our chartists. Holding out quite comfortably in the green, by the way. That's the initial pre-open take around the 18,450 mark, and for the Sensex up about 100 odd points. Naresh, your top mid-cap call?
So that would be a buy on Ujjivan Financial Services. The stock has now come very close to a big cup and handle breakout. The high was in somewhere around 2020 into 2021 around 300, 320 levels. Made the similar high in 2022 and now we are coming back above the 300 mark. So a classical cup and handle formation out there. The stock has done nothing for the last 7-8 years. Seems like a major breakout in the making. Risk reward trade, keeping a strict stop loss at 294, keeping an initial target price of 330 to start with.
Jivan, it is. What about you, Kunal, your cracker stock?
Well, it's a buy on Glenmark Pharma, stock which I've been bullish on since last 1 or 2 weeks. Looks attractive. The stock managed to break past about the 600 levels on Friday, closed at the high point of the day as well as of the week. Looks attractive. My earlier targets were around the 620 mark. The stock seems to be reaching to those levels, so traders could look at revising the targets on the upside. 632 could be a fresh target from current levels if traders look to initiate a fresh buy. 602 as a stop loss.
All right, Glenmark and Ujjivan, those are the mid-cap trades. Let's move right on.